What's going on, you guys? RJ with RJ's Trades. We are back with our fourth and final video of 1K worth of game. All right, this is the 4-part series that I've given to you guys just to say thank you for getting me to 1,000 subscribers. Let's get to 10K, and I ain't no telling what I'll do at 10K. All right, so make sure you guys leave a like, comment, and subscribe. Okay, today's masterclass is going to be all about day trading. Okay, so this is the one that all of you want. Everybody just wants to learn how to day trade. Okay, so I did this one last on purpose, right? And as I always say, I put these videos in a sequence, right? So I got the playlist listed down below. I have the videos in a sequence for a reason, because it just builds on top of each other. Okay, so if you don't understand video one, you're not going to understand this. Okay, so what we're going to do here, I'm going to lay out my 4-step process for day trading. So make it very simple for you guys. I'm going to break it down in a way that a child can understand. Okay, I'm going to look at some stocks that we could possibly have for a good day trade that fits what we're talking about, and we're going to lay down a couple things here. Right, bust a couple myths, and we're gonna have a good one here. Okay, so this one is the one that you guys wanted, so let's do it, man. Let's get straight into it here. Okay, day trading. What is day trading? Day trading is when you buy and sell the stock in the same session. Okay, so the market is open from 9:30 a.m. Eastern time to 4 p.m. Eastern time, right? So if you buy a and you know, we mostly trade options on this channel. If you buy a call option at 9:30 and you sell it at 3:59, it's a day trade. If you buy it at 3:50 and you sell it at 3:52, it's a day trade, right? You buy it at 9:15. Oh, sorry, can't do it at 9:15. You buy it at 9:35, you sell it at 9:38. It's a day trade. Okay, day trade is when you buying and selling the same day. Okay, now the thing about day trading, the way that I do it, right? Because the only thing I can teach you guys is the way how I do it and what works for me. I love to day trade momentum. All right, so what you guys are going to see here when I show you guys my 4-step process is my process for day trading and swing trading is pretty much the same, right? Not a lot changes at all besides the contracts and, you know, entries and exits and things like that. Okay, so it's all the same. Once you understand my ideology behind trading, you can understand easily how I day trade, how I swing trade, scalp. You'll understand everything. Okay, so make sure you guys watch those videos. Like I said, okay, watch those videos. All right, and also one more thing we got to get out of the way first. Okay, day trading and trading in general is not a get rich quick scheme. Okay, this is not a casino. You do not put all of your money in one trade thinking that you're going to get rich, because you know you're more than likely going to lose it, right? And if you do get lucky and you win your trades or whatever, there's only a matter of time before you go all in that you're going to lose. No one is going to win every single time in trading, especially day trading, right? Day trading is the hardest form of trading because you have to be very, very, very precise. You have to be quick. You can't be indecisive, because we're talking about 30 seconds to a minute could be the difference between you having 20-30% profit, and sometimes, depending on what kind of contract you have, being 20-30% in the red, right? Especially if you like trade 0 days, which, you know, I kind of shy. I stay away from those for the most part. But let's get straight into it, man. So let's talk about what is my ideology behind day trading. So the same way as swing trading and how I like to read chart patterns is I like to day trade momentum. Okay, I want to day trade momentum. So my ideology is, if I can find a stock that has a chance to make a huge move on a larger time frame, it is easy or easier for me to catch a move on a smaller time frame. All right, let's think about that. What does that mean? If I see that a stock can move from, let's say, 650 to 670, all I have to do is catch a little piece in between of that for me to make money, right? All you have to do is catch a piece of the larger move that you see. All right, if you guys have been following along, you guys know that I do top-down analysis, right? So we're doing that same exact thing with our day trading, right? So we're going to be looking at the daily chart and the 4-hour chart to find our plays, but we're going to execute on the 5 minute or 1 minute, whichever one you see better. Those are the two that I use. Okay. So let's get into it here. Our 4-step process. Okay. And I'm going to break it down like you in kindergarten. Step number 1, you have to find the bias of the overall market. Okay. What is the overall market? The overall market is SPY and QQQ. Okay. So I typically like to trade on the side that SPY and QQQ are going, unless I'm having like a scalp or something very quick, right? I typically like to trade on the same side of SPY and QQQ. So the first thing you have to do is get your bias for the day or for the week, or, you know, just that time period at the moment. Okay. So how do you do that? It's the same way we analyze any other stock, right? So if you was to go and do your top down analysis, right, you want to be on the side of the overall trend. Here we can obviously see that the trend for SPY has been upward. Okay. We can see that the trend for SPY has been upward. I don't really have a reason to be super bearish on the market right now, right? Does that mean that we can't have bearish days, kind of like we did right here? No, that doesn't mean that. But this means that we want to, more times than not, be on the side of playing calls, breakouts, or dip buys. Okay? Because things in a bull market are more likely to break out, or they're more likely to get bought at support. Okay? So number 1, we have to find our bias from our ETF SPY and QQQ. So at the moment right now, there's like live example here. I haven't even looked at the charts yet for the night. Right now, SPY daily chart, we are bullish. Okay, look at this. We've been going up, right? So we have taken a little bit of a breather, but we are still bullish. Okay, so what I see right here, this is exactly how we analyze this. I say, okay, I know we're bullish. Am I near a support or resistance, or am I in the middle? All right, that's important. Am I near a support? Am I near resistance, or am I in the middle? If you look right here, we are closer to a resistance than a support. So if you look right here, our 652.93 level right here, look at this, a clear support. 1, 2, 3, 4 times that we got touches here, right? This is a clear area of support. And if you look right here, our all-time high / our resistance is at 673. SPY closed at 671, right? So SPY is a lot closer to the resistance than the support. All right. So it's either going to do one or two things. It's either going to pull back down to support and reject this level up here, or it's going to go through this level and make higher highs. Okay. Now, the thing about this is you're kind of in a weird spot right here, actually, because if you take a look here, you actually have been kind of consolidating for a little bit here, right? So this really adds on to our thesis that, hey, if this thing breaks out to the upside, this could be huge. Because when you see consolidation, I want you to think about compression, right? So think about a plastic bag being squeezed. It's squeeze. When it finally pops, that air just bursts out, right? So that's the same thing that the market is going to do whenever you break this support or resistance, okay? But since we're closer to this breaking the upside, I'm still going to be on my bullish side here, and I'm going to be looking for plays that fit a bullish thesis, okay? So we're going to talk about more how to do that in just a second, but let's check QQQ as well here to see what they look like. Okay, now if we go to QQQ, you can see a little bit of the same thing here, but even on QQQ, this actually looks like a pattern breakout. So watch video number 1. This actually looks like a triangle pattern breakout to the upside. Okay, so this is looking like a bullish pattern breakout, right? Now it's right here at resistance. So do you have the chance to reject? Yes, but in a bullish market, I'm betting on the side of breakouts more so than fake outs, right? Although you can get faked out, right? Nothing is 100%. It's all probability, all right? Nothing is 100%. You have to be ready for both ways. That's where your risk management comes in, okay? But this is a bullish chart pattern that's breaking out that tells us that the stock is likely to continue upward here. And the thing that's so good about this is QQQ is an ETF. So that means QQQ holds the top stocks such as Apple, Nvidia, Meta, Microsoft, right? So if QQQ is breaking out, those stocks are more than likely to have a good day or to break out, right? Okay, keep that in mind. So process step number 1 is to get your overall bias from the overall market. Okay, get your bias from the overall market, right? And how do you do that? You use our tools, you use our chart patterns, you use our levels, right? You use our trend lines to say, okay, is this a bullish trend, a bearish trend, or are we consolidating? Because one thing that does kill day trading is consolidation, right? So you may notice that the past, and today is the 21st of October 2025. The past couple weeks hasn't been a whole lot of breakouts. You've seen a lot more consolidation, more so than anything, which is shown in the market. But if you see that SPY and QQQ are near resistance, I guarantee you, SPY and QQQ starting to break out, you're going to see a lot of breakouts in the market. All right, mark this. All right, 10/21/2025. Okay, so that's process number 1. All right, drop fires in the chat if this is making sense. If you got any questions, drop it down below and I will answer them. Okay, number 2, right? So process number 2 is to find stocks that fit the overall bias that you already have. Okay, now once again, my strategy is based off of momentum and probability. Okay, we want to have as much probability on our side as possible, right? So think about, if I say that, okay, QQQ has a higher chance to go up, right? If QQQ has a higher chance to go up, you build that upon with the stocks that are in QQQ, you want to find the stocks that are already bullish. Okay, the analogy that I always like to give is kind of like a basketball player, and it kind of works, kind of both ways. Let's say a player is on defense, right? A player's on defense and he has a busted ankle. The other team is going to likely go at him and try to score on him because he's already compromised, right? They're not going against the people that are healthy. They're trying to go at the guy who's already hurt, right? So that fits if the market is bearish. Now, the market is bullish like it is now. Use this analogy, okay? Think about the shooter, right, on the basketball team who has the hot hand. Let's say Stephen Curry has hit 4 threes in a row, all right? So let's say Microsoft has went up 3% to 4% 3 days in a row. Why would we go against the hot hand? Don't go against the hot hand. Keep riding the hot hand until it ain't hot no more. All right? Day trading 101 in a nutshell. Okay? Let's find a couple stocks here. So what are we looking for when we say find stocks that fit that same bias? All right? Since we're bullish, we are looking for stocks that have bull flags, right? Bullish pennant breakouts. We're looking for stocks that are getting close to resistances or stocks that are near support. We want to always stay away from stocks that are moving sideways. We want to always stay away from stocks that are moving sideways, okay? Stay with me here because I know that we're on the daily chart. We haven't moved yet, okay? Because you have to understand how to break this down. You have to see the bigger move to catch the smaller move, all right? If I see a person asking me about a chart and the chart looks like this, and they may say, all right, like this for instance, they say, man, why are you looking at QQQ being bullish? Do you not see that this just fell? They're looking at a 1 minute chart. I'm gonna tell them to zoom out and tell me, how does this look bearish to you? All right, follow the larger time frame. All right, so we're gonna go through some stocks here, and we're going to be looking for stocks that are near resistance. All right, so stocks that have potential to break out. All right, we're looking for stocks that have those bull flags, those bullish pennants. Looking for stocks that may have like a falling wedge, right? Because I actually do have a play that is pretty good here. Okay, so I actually have a few in mind to just save a little time for you guys here. I know your time is valuable. One play that is really decent is AMD, right? So AMD, what did I say we're looking for? We're looking for stocks that are near resistance or stocks that have bullish chart patterns, okay? So AMD right here, this is called an ascending triangle pattern, okay? An ascending triangle pattern, all right? This is a chart pattern that tells you that the stock is more likely to go up than to go down. How do you see this chart pattern? All right, and notice we're on the 4 hour. All right, this chart pattern is formed from a flat top resistance and a rising trend line that acts as a support. So notice right here, this is a resistance at 242.83. Okay, so at 242.83, right around 243, AMD has been rejecting. Boom, boom, boom. You may say, well, why do you want to watch that? It has a bullish chart pattern, and I know if it does break and when it breaks, it's going to go. Okay? If it breaks and when it breaks, it's going to go. Okay? Because think about our bag with the air in it, right? Once you squeeze that compression, that air has to go somewhere. When it finally pops, it's gonna go. Right? Now, can this thing break down and be bearish? It possibly could. But we're going to stay taking the hot hand. AMD has been the hot stock. Why go away from it? So the hottest stock on the market is giving you a bullish chart pattern. Okay, so that's one stock that has a really good setup that fits the overall bias. Let's just go through here a couple of them. Apple, right? So Apple is at highs, but doesn't really have a super clean setup at the moment. This is a good example. PLTR, a great example right here. If you look at PLTR, and we'll look at it from the daily chart, you will see that yes, it has been going upward, but at what point does PLTR need to break to give us our next big move? Where's our next few important levels? You can see here that PLTR has been in a range. Now, what did I say earlier? I said we want to find the stocks that are near the resistance or looking to bounce at a support. PLTR is right in the middle. So hypothetically, you can't do anything with PLTR day trade wise until it breaks 187.43 or breaks 170.93. Right now it's at 181. You're in the middle, right? So if you've been trading PLTR lately, you may notice that it has been choppy. It's been going up and down, right? Because on the daily chart, you are in a consolidation phase. You can't get your good day trade. You can't get your clear skies until you break this 187 or this 170. All right. Let's see if we got another one here, because I got a couple more that look really, really good. Let's see. Was it Amazon? Nah, not no more. I think I had one more that looks decent. Maybe not. Lulu. What did I say? Once again, we're looking for stocks that fit our overall bullish bias. Okay. What do we have on Lulu? This is another chart pattern right here that I haven't given you, but I'll give it to you now. This is called a double bottom chart pattern. This is a bullish chart pattern that's basically formed when a stock has had trouble going below a certain point twice here, right? So if you look right here at Lulu at this 162 area, it couldn't break and hold here, popped back up, came back down, and has popped up again. Now, this has a bullish chart pattern, okay? And this is going to lead into our next subject here, so I'll hold off on that. I'll hold off. But this does have a bullish chart pattern, and it is near a resistance. All right. So if you look at this, our resistance is 180.52. We close at 181.39. So we close right above the resistance. Okay. So when things pop past a resistance, they are going to try and go to the next one. So I'm gonna let you guys look at this chart here for just a second, and you tell me where's the next one here. All right, because it's something that looks really good on this that I'm watching tomorrow. All right, on October 22nd. Okay. All right, so that is process step number 2. Find stocks that fit your overall bias. Stay away from stocks that are going sideways or ones that look bearish. Okay, so this is an example of a chart that I wouldn't touch. This is Uber. This is doing absolutely nothing. This is not a setup. It's not near a really strong support like this one down here. You're kind of in no man's land, right? So you can't do anything with this right now. Okay, so find stocks that fit your overall bias. Step number 2. All right, so before we get step number 3, once again, make sure you guys leave a like, comment, and subscribe. Let me know if this is helpful, man. I'm giving you guys exactly what I do. I've been trading for 6 years, going on 7 years now. I'm literally telling you guys exactly what I do. All right, not holding anything back. Go watch videos 1 through 3. All of my strategies are there. Okay, let's go to step number 3. Is to take those stocks that you found that have those biases, the same bias. Now you want to see how far can the stock go. All right, this is super important. Okay, so this is one of the most important things, maybe the most important step. How far can this stock go? Why is that important? This is important because as an options trader, we make money from the stocks going up or going down. You're not making money from it going sideways unless you're doing another type of strategy that is not, for beginners. Okay, we make money from the stock going up or going down. So it's important that we know how far can this stock go up or how far can this stock go down. Let's go back to our examples here. All right, let's first take a look at Lululemon, right? Because I love this one. Let's take a look at Lululemon. We said that it was a resistance here right around 180.52. Okay, when stocks break a resistance, go back to video 1 and 2. When stocks break a resistance, they want to go to the next one. Where's the next resistance on Lululemon? Well, if you take a look here at this Lululemon stock, Lululemon actually has a gap fill all the way up to 198. Okay, so this is the kicker. You have room to 198. Now, how far is that? All right, so it's at 181 now. You go to 198. That's $17 worth of room. Now, this is the thing. This is what you got to ask yourself. Is this amount enough to make money on this stock? Is a $17 move on Lululemon enough for you to make money? Of course. So that $17, like we talked about earlier, that's the big piece of the pie. All you need is a chunk of it. All you need is $1, $2, $3 move to make your day. You're focusing on day trading here. We're not talking about swing trade. This is also a good swing trade, but we're focused on day trading. Day trading, you're finding the big move and you're just trying to catch a piece of it. All right. Absolutely perfect setup right here. All right, so think about what confluences we have. We have the overall market is bullish. Okay, we have a double bottom pattern. All right, we have a stock that has rising volume. Look at this. We didn't even talk about volume. A stock that has rising volume at resistance, right? And it closed above the resistance, and it has $17 to run. Think about all of that stuff that I just said and tell me, is it more likely to go up or go down? Okay. Man, y'all drop a fire in the chat, man. I'm giving y'all the game. I am giving y'all the game here. Okay. Now, AMD. You may say, well, RJ, this is at all-time highs. You don't have a target here. You're right. You can't really get a good target at all-time highs. The only thing that you can really do is to take the length of the previous impulse move. So this impulse move on AMD, which this is absolutely crazy. I'm not saying AMD is going to move this much again, right? The last impulse move on AMD was from about 172 to 242. Okay, so it went up $70 or $80. Oh, what is that? No, $70 in a very short amount of time. So one thing that you can do here that's going to give you an absolutely crazy price target, actually, is to take the length of the impulse move and put it at the breakout point. And this says that we have potential to go up to 319.99, so 320, right? So am I saying it's going to go that far? No, but that's what the chart says, okay? Now ask yourself, 242 to 320, is that enough room for you to catch a day trade? All right, okay? And that doesn't mean that you have to sit here and, try to hold to up there, right? When things get to all-time highs, I like to do mine like $1 to $2 increments, right? So I might say something like AMD, I may have a target of 245, 250, 255, something like that, because AMD is a stock that can really get moving, right? It can pop $7, $8 on you just like that, okay? So let's do another one here. We talk about AMD. Let's do one that's not a good example. Uber, back to Uber again, right? We got Uber. We may say, okay, well, where's our supports and our resistances? We don't really have a super clear resistance here at all. All right, you can maybe say up here at 100, but from where you are now, where are your levels? What can you get in and go off of, right? You have to know where is your targets, okay? You got to know where's your support, where's your resistance. Here, the only resistance that you can really see, unless you go on a smaller time frame, right, is right here at 100.32. Okay? So now let's say that you are nitpicking and you be like, okay, well, it has a resistance at period at 93.2. For example, what do you ask yourself? Is this enough for me to make a profit? From 93 to 93.2. A 20-cent move on Uber, is that enough for you to make a profit? If you're getting 10, 15, 20 contracts, maybe. But most people are not. Okay? So this is not as good as a move as AMD, as Lulu. Okay? I hope you guys are starting to see or understand what I'm saying here. Okay? So step number 3 is we have to find out how far we can go, and we have to do it relative to the stock, okay? Relative to the stock. A 20-cent move on AMD is not the same as a 20-cent move on Uber, right? So a 20-cent move on, let's do for instance, a 20-cent move on AMD, you're not going to get anything. A 20-cent move on Beyond Meat, you're going to get a lot, right? Shout out to Beyond Meat, man. They popped today. I know a lot of you probably made money on it. Probably day traded that. So congrats on that, right? But every move is not created equal. You have to see how far this thing can go. Use your levels, and you have to do it relative to the stock, okay? So now, part number 4, okay? And we probably could even do a 5th part. We'll see. Part number 4 is you have to find your entry. This one can be a little tricky, but I'll show you guys how I do it, okay? Now, there's a couple different scenarios here, and I'm glad that we have AMD and Lulu for an example, because they fit the scenarios perfectly, okay? So let's go to AMD first. AMD, right here, for a day trade, I'm not interested until we break 242.83. So it's at 237 right now. I have no interest in AMD until it breaks 242.83. And that is going to be my entry, okay? It needs to break and hold that, okay? And we'll talk about it at the end. We'll go through our methods of entry, right? That's kind of going to be like a part 4.5, part 5. But a play like this where it's under the key level, is not there yet, I am going to use that key level as a place of interest, as a entry. Okay, I want to see it break and hold. All right, now a play like Lululemon, where we have already broken that level, where can you enter here now? Well, you can't really say, well, unless it comes down in the morning, you can't really say that your entry is going to be 180.5 because it's already above that. Okay, so now you kind of have to adjust your targets. Okay, so you could possibly say, okay, well, what's the high of day? The high of day for Lulu, when it broke out of this, the high of day was 183, right at 183. So now you could say, okay, that's the place where I want to get in. I want to see if it has continued strength above that high of day, because it is already above our key level. So if it's already above the key level and it's at the high of day, that's adding to your conviction. Okay, so you just have to adjust and still make sure that it's enough room for you to make money. Okay, so that's only like $1.50, a couple dollars move there. So you still have up to 198 to make money, which is still plenty. Okay, so you have to kind of move your target as far as your entry here if it's already above your key level. Okay, that's how I like to do it. Some people may still use, those key levels entries. I like to move mine, okay, because it's already proven that it could, pop up there a little bit. I want to see it go higher, right? I'm momentum based. I want to see the momentum. All right. Okay. Man, we are teaching today, man. Guys, drop fires in the chat. Let me know if this is helpful, okay? And that was the fourth part here, but I'm gonna give you guys one more thing here because I feel like I cannot end this video without showing you guys how do I like to get in these plays. I cannot end the video without showing you guys that. So I'll quickly show you guys here, because once again, I've already made videos on this. Okay, so watch the first 3 parts because this is all in there. How do I get in these plays? Once I get my bias, once I find the stock that fits the bias, right? Once I see where or how far the stock can go and I see where my entry is, I then need to get my execution down. Okay, so what kind of contracts do I like to get on day trades? When I'm day trading, I typically like to get same week expirations. I don't really like 0 days like that, just because any little hiccup on a 0 day can really cost you. I like to, when I'm day trading, I'm either going to get a Friday expiration or I'm going to get a next week expiration. If it's like past Wednesday, if it's like Thursday or Friday, I'll go next week. As far as in the money or at the money, I typically like to be at the money for day trade. So like something like Lululemon at 183. I would, if I was to day trade this, I wouldn't go past 187.5, right? Maybe 190 if the contract details are good. Okay. Always just make sure that you have a good delta, and your theta is going to be eating at you because you have a shorter term contract. So be aware of that. All right. So that is, I keep it simple with the contracts. My execution, I have 2 methods. Number 1 is the chart patterns. All right. So what does this look like? This is what it looks like. We're finally going to get down to the small time frames. All right. So let's say, for instance, let's say it was on a 5-minute chart. I'll show you from here. This is perfect. This is absolutely perfect. What would this look like? I'm looking for a chart pattern above my level or right at my level. So what does this look like? This right here. It could do something like this. You don't chase the up move. You're looking for that flag, and you're looking to take the breakout here to the upside. Okay, looking for that flag, and you're looking to take the breakout there to the upside. Okay, so what else could you possibly see? You could possibly see a pennant pattern. Okay, so you could see something like this, which I can never draw these things. I can never draw them, but you get the point. You could have a pennant pattern here. I'm terrible at drawing that. Let's just imagine that's a pennant pattern. Let's imagine that's a pennant pattern. Oh, that's actually pretty good. You can have a pennant pattern. Okay, So you never really want to, you never chase the up move. Please never chase the up move, okay? Wait on some type of pullback, right? So chart patterns are pullback entries, okay? We're waiting on those flags, waiting on those pennants, right? To take them to the upside, right? Now our other method of entry, I keep it very simple, guys. This is all that I do. If I don't get a chart pattern, I'm looking for my break and retest. So what does it look like? This right here. We finally break. I'm waiting to see, do the sellers bring it back down to the level, and I want to see the buyers defend it. What does the buyers defending it? What does that look like? That looks like bullish hammers at our level here, at our retest. Bullish hammers, bullish engulfings. A strong bullish candle with volume. That shows our bulls defending the level, okay? If they don't hold the level, it's going to be a fake out. So the break and retest is actually really good. I actually like the break and retest a little more than the chart patterns, to be honest with you, because the risk is super defined as far as the break and retest, because if your candle doesn't hold, then it's not going to hold, right? So those are my two methods of entry: the break and retest and the chart patterns. If you want more information on the break and retest or more information on chart patterns, make sure you follow the links down below to 1K worth of game. This is the 4th video. This was all about day trading. If you guys want to, make sure you guys leave a like, comment, subscribe. Make sure you guys follow the Instagram. Hop in the Discord, man. We're gonna have another great week. I hope this was helpful, and I'll see you guys in the next one, man. Peace.